Oh no, the market is selling off. Or is it? Watch this to find out.
Yeah, got me in this party all up in the zone. Hottest Betty's trying to take away my cell phone. Like, come and party, I've been trying to shake you off my mind, but just can't.
Sup, sup? Welcome to the first trading day of 2021. And wowza, it was a spicy one. So, what happened? The spiders, negative 1.4%. The Qs, negative 1.4%. They both sold off early morning, early half of the day, until lunch hour, until they had found a little bit of bid underneath, not a lot, and they managed to reclaim around the 367, 368 level. That's for spiders. Same thing for Qs. There was a little bit of bid under it at the end of the market. And if you want some more good news, the market on call orders, that means the big funds gonna trying to rebalance their funds or trying to get into positions at the end of the market because they have huge positions. That was $3 billion to the buy side and around $900 million to the sell side. So the overall market sentiment right now it's slightly positive still. However, when we look at the VIX, we see a different story. 20% jump today on the VIX, the volatility of the market. And we look at VVIX, volatility of the VIX, bam, even more. Right? This is scary. We're above the 110 level. Above 110 level is a danger zone, and we have been over that point for probably the past year. We've been on thin ice for a while now. And so what led to the market sell-off? First, this early section you see here is most likely driven by fund managers de-risking their portfolios. Why? This week, there's tons of volatile events, potentially volatile events happening. First, Tuesday, the Georgia Senate runoffs, the elections for the Senate. A win for the Dems means the Senate is now 50-50. So Kamala Harris, the Dems, have the deciding vote in the Senate. What this means? Well, currently under the Trump administration, there's a lot of kickbacks to corporations, and they use these extra tax breaks to buy back their stock, right? Keeping the market afloat. This is partly as to why we saw such a crazy 2020. So under the Dems, we wouldn't have that tax break, and there's less buybacks, and less buying means lower prices. However, later this week, there's also the FOMC minutes. The Fed is meeting and releasing minutes, releasing notes, deciding on what to do with the economy now that the vaccine is out. There could because remember, right now the Fed is still buying up products in the market, propping up the market. May not be all of the market, but they're propping up the market a little bit. And if they decide to reduce their purchases in the market, we could see a slight sell-off as well. So, but that did not account for the entire loss today. What I mean by this is the market showed weakness today. The fund managers de-risking their portfolios alone wouldn't cause such a crash. However, that led to a snowball effect. As we see, the market tried to bounce around 1045. However, the market showed weakness, and the de-risking and selling of the funds in the fund manager portfolios led to further crashes. I mean, the retail traders are selling, everyone's selling. So you basically amplify the volatility for this week, as we saw VIX gradually going up until 12 o'clock, and then trying to flat and then drop a little bit. So, what's next? What is the future? If you look at the, I cannot pull up the future volatility futures on my brokerage right now. However, if you take a look at them, the volatility futures have inversed. What does this mean? For example, the VIX futures around 15, 20 day out is actually more expensive than the VIX futures 45 days out. And why is this important? Usually, the longer time you have, the more risk you have because more things can happen in that time frame. However, we're seeing the volatility futures be more expensive than short term than volatility futures long term. So it means we're expecting a lot of volatility. The fund managers, there's a lot of hedging in the market towards volatility. So people are expecting bad things to happen. And even if bad things don't happen, that could still lead to a sell-off if there's fear in the market. Fear is never good. And that's bad news. However, if we can get through this week and there's no significant negative news, whether from either the FOMC meetings or the Georgia Senate elections. We can see the rise in the spiders and Qs to continue. However, currently, because of the snowball effect, there's a lot of fear in the market, and confidence in the market is pretty low, especially for the first trading day of 2021. That's a lot to handle. Now let's go into specifics. Let's look at, for example, what's green today? Tesla. And Tesla is up 3.5%, mind you. And yet the SPY is still down around negative 1.5%. Imagine if Tesla was down today. Tesla alone today stopped further bleeding from the market. If Tesla was down negative 3% instead of up 3.5%, the spiders you could expect to go down towards negative 2% and just further snowball, right? Imagine if the spiders went to negative 2%, it probably wouldn't stop there. So Tesla alone pretty much saved the market today, at least for spiders. However, among the sea of red, you also see some greens, right? So what else is green? TSM. TSM is semiconductors. And talking about semiconductors, let me first show you the general market consensus on semiconductors today. Semiconductors was ready for a breakout. It's been consolidating for a month now, and it did. If you look at market open, bam, it all went up trying to break. However, the snowball effect from fund managers de-risking their portfolios snowballed into the general market, and that led to a market-wide sell-off. And look at this ugly ass candle over here. Oof. I never like solid green candles, because what does this mean? A solid green candle is pretty much the same as a red candle, because it showed it open here and it closed lower. However, it's green because it gapped up so much in the market, early in the market, that it didn't end red at all, because it gapped. Let's see. The SMH gapped up 1.4% today, this morning. That's crazy. However, now we have this ugly ass looking candle. This is a very, very long tail. This is a very long tail, and this is a reversal signal, right? It's a false breakout. Try to break out, but the bid was not there, and everyone sold off. However, this is a special case because it was going well for the chips. The chips was the victim of today's sell-off. It was on track, as you saw, ready for a break. However, the general market sell-off pushed everything down, and as a result, we have a false breakout candle for the chips. And what it speaks for the future, I'm not too sure. There's times where you can just be not sure, because it's not the chips' fault per se that we have this false breakout candle. It was the overall market conditions. If the overall market conditions continue and the volatile events this week prove not to be too volatile, what happens? Who knows? It could continue to break up, or because of this candle alone, it can ruin the whole consolidation, and we could retest the lows. That will be scary, around 210. That's a 10-point drop right here. So TSM today was positive, as we also saw AMD and NVIDIA. This shows that they're the market leaders in the chips sector. And TSM especially was green today because of some news it had. It was going to expand its capex spend, capital expenditures, raise it to around $5 billion as it pursues future demand for chips. Remember, TSM are contract-based chip makers. So they make the chips from designs from firms such as AMD and NVIDIA, which also happen to be green today. Intel, again, trash company. If you've been watching this channel, I don't like Intel. It went down. I'm pretty happy. However, I do like Micron, and it also went down today. It went down 1.5%, which wasn't the worst, but look at this candle. This ugly red false breakout candle. Oof. And look at the volume too. That's ugly. Again, this is entirely not due to the fault of Micron. It just got caught. Its shiny moment just happened to get caught in the middle of a market sell-off. As we see, aftermarket is up 0.5%. There's still strong sentiment in this. However, it did not bounce like other stronger stocks like TSM today. If we compare the charts, TSM, right? Again, all the chips today started off with a breakout, up all the way until 114. Same with Micron, right? Went all the way up, 1%, 0.5%, 0.5%, 0.5%. It went up all the way plus 4%. I remember because I was talking to my friends about this. until $78 until the sell-off. Also, remember, for Micron this week, there's earnings. It reports earnings Thursday after market. So usually there's a run-up before earnings, and especially since the DRAM prices and NAND prices are inversion right now, we're on the up leg of the cycle again, there should be more run-up. However, today's candle looks very, very ugly. So what happens in the future? I have no idea. And there's points in life where it's possible to have no idea. It's just possible to sit out of the market. So let's go next. Oh, and by the way, I couldn't even trade Micron today because I couldn't trade any stock today because this Webull, this client, went out of commission. So I don't know whether it's fortunate or unfortunate. I'm not too sure. Anyway, let's go down. See what else is green today. Fiber's green, but everything else is pretty red. And then we see Walmart and LULU. If you have watched the top 5 picks of the week video I posted about yesterday, but the day before that, not too sure, you will see they're both on our buy list, one of the 5s. And guess what? They went up 1.5% and 2.5% respectively, despite the market sell-off. That shows very, very, very strong strength in the market. Right? If everyone's selling off and you're still up 1%, 2%, that speaks to your strength. And that's exactly what happened today. Both Walmart and LULU bounced at their trend lines. Right? If you remember the video, I said they were going to bounce, and they did. Same thing for LULU. Bam. Look at this great bounce. And what's even better, what's even more impressive for LULU, and if you were going to hold any stock in this uncertain times, remember, I said the future for the chips is uncertain. No one knows what's going to happen because its month-long training just got ruined by the market sell-off. So now where do we go to? Now we go to Walmart and LULU. These look pretty good in the future, right? Even despite the market sell-off today, they still went positive and very, very positive. And okay, let's take a closer look at LULU and why I say it's so impressive. When it opened today, it went up, right? Then it sold off. However, after selling off, it bounced straight back off to a high of the day. That is very, very strong. It probably means all the other traders out there don't know where to put their money. So they put them into consumer goods like Walmart and LULU. So this sector is looking pretty hot right now, especially since the overall market is very uncertain. And one more thing I want to point out today, and it is FUBO. Oof. Another negative 14% day. When is this going to stop selling off? No one knows. Look at the volume. Similarly high. It always tries to bounce, but it fails to bounce. Look at this. Negative 13%, negative 16%, negative 14%, negative 16%, negative 15%. Oof. However, FUBO is selling off because, well, it's a combination of unfortunate events. I will go into more about FUBO and how FUBO can potentially be a 50% gainer this month. How this stock could potentially gain 50% this month, and I will go through that in the next video. So that's pretty much it today, guys. Remember, let me do a summary. So the market sold off today. The market showed weakness after the fund managers de-risked their portfolios in preparation for this week's volatile events. And also, as the market sold off, we also saw the volatility futures inverse. That means the short-term volatility is actually priced higher than long-term volatility, which is unusual. And next, the chips, their fate uncertain. Look at these ugly candles. Even for TSM, it went up today, but guess what? This is an ugly shooting star reverse spinning top doji. That is very, very bearish and might go down in the future. However, SMH, it wasn't going down on its own fault, so we still don't know. Not too sure. Stay away from this. Observe. Continue to observe. And as we saw, remember Piton in the top 5 video, we said it was going to go down. Shorted. Bam. The market's sell-off actually helped us this time because it was going to sell off anyway, and now it just sold off even more. Negative 4%. Congratulations to whoever listened to my advice and entered the short position this morning. And lastly, Walmart and LULU consumer goods seem to be the winner of today, right? In times of uncertainty, we go to consumer goods, we go to Walmart, we go to LULU, especially since they're exactly at their support trend line right now. So that's it, pretty much, guys. That's the market runoff, market analysis For today, is a sell-off coming? We don't know. Continue to observe at the important events coming up this week. Remember to leave a like, comment, or subscribe, and I'll see you tomorrow.